From 1998 all the way up to 2017, the S&P 500 has returned 7.2% per year, while the average investor has only returned 2.6%, which just about beats inflation. And if you look at the bottom performance chart, it compares the S&P 500, the yearly return, versus the Barclay Hedge Fund Index, which is basically an index showing the return of the biggest hedge funds in the world. And what is a hedge fund? Well, it's a company which focuses on investing in companies, and it has these investing professionals which are paid millions of dollars a year to beat the S&P 500. And if they can't even do it, and the average investor is so far behind the S&P 500, do investing strategies actually work? Does it make sense to invest in single companies and not just buy the whole S&P 500? Well, my theory is that the reason for this is that these investors don't follow a long-term investing strategy. Because if you look at this, investing strategies can work. This graph shows the percentage of stocks outperforming the S&P 500 per year from 2007 all the way up to 2023 year to date, which was in May. And you can see that the median is around 48%, meaning that if you create a portfolio of different companies, for every company you have, there is a 50% chance that one of your companies will outperform the S&P 500, and a 50% chance, more or less, that the other of your companies will not outperform the S&P 500 for that year. So as an investor, who I don't remember really like to say, the key to find a good stock is to look for a great company. And by seeing these numbers, I am very confident that you, myself, and every other investor out there can actually outperform the S&P 500 by choosing single-handedly stocks. So today we will be discussing how to develop the best investing strategy. But what is the key to a great investing career? Well, I have divided into 3 different buckets, which, when combined, will ensure that you will obtain long-term performance. The first one, which is clearly the most important one for myself, is that you must educate yourself, keep improving, and keep becoming better at what you want to achieve. Nowadays, there is an infinite amount of free and easy to access content online, whether it is YouTube, whether it is online books, online courses, etc. And you, my friend, just by watching this YouTube video, you are already ahead of the pack. You are trying to become better at investing, at developing an investing strategy, and you're watching YouTube videos on that, while the majority of the world is just watching TikTok or entertainment videos. So I have to tell you, first of all, thank you for watching this video, and second of all, you are ahead of the pack and you're doing great by focusing on committing to this. The second step you must accomplish is to create your own strategy. I don't want you to copy a YouTuber strategy. I don't want you to copy my strategy. I don't want you to just follow blindly any other investor that you have seen to do this successfully. I want you to look at the broad and the sheer amount of investing strategies that there are, pick the one that works for you, and even combine different aspects from strategies and choose one or create one where you feel 100% confident in it and you feel comfortable in it. Thirdly, you have to successfully execute the strategy. You must stick to the initial plan and do not deviate from it. You will, of course, adapt and be a little flexible with your strategy, but you must stick to the plan with a long-term vision, because if not, you will end up like one of the average investors who returned around 2.6% and underperformed the S&P 500 every year since they started investing. But if you, my friend, are educating yourself, which you are right now, you create your own strategy, you feel comfortable with it, and you execute it correctly, you will ensure long-term outperformance. So first, by educating yourself, I divided it into 4 different categories, but there are a lot more, of course. I think these are the easiest one and the one that have helped me the most. First one, of course, is YouTube. I think it's the king and the place to be for educational content. I think you can find amazing content, whether it is about stock analyses, and I don't mean you must take everything for granted, but you can get ideas of good investments by looking at stock analysis content. Of course, I do have a lot of those if you want to check them out. You can check for super investor interviews, see what they're saying, look at their life lessons and everything like that. Check for economic news or even investing strategies for yourself to develop your own one. The books, I have recommended 3, which are in order of, the easiest to follow to the hardest one to follow. They're all really good and I would recommend every single one of them. First one is Rich Dad, Poor Dad. The second one is like psychology of money, and the third one is One Up on Wall Street. The first two teach you more about financial literacy and personal finance, and the third one is full on the stock market and investing. Also courses where you can learn about financial literacy or even personal finance. And the fourth one, is of course to ask for help to family, friends, professionals, anyone you can find on the internet, just anyone. Ask for help. Surround yourself with people who have similar mindset and similar goals to the ones you have, because that will make you improve and get like a constant inflow of advice, tips, and motivation. Now, to develop a strategy, I divided it into 4 different aspects. The first one being research. You have to research what strategies are out there, what you like about each one, and what they have accomplished, what the main basis points are. You also have to research about the different stocks there are, if they go with your strategy or if they fall out of the strategy you're following. The second one is to invest. Of course, you have to build your strategy and then test it with limited capital. And then you have to improve what doesn't make you comfortable, what doesn't make you sleep well at night. And the fourth one is, of course, repeat the process. You must research, invest, improve, and repeat over time. And investing, you must start with a limited capital because nobody gets it on their first try. But as you go improving, becoming a better investor, you can increase the capital allocation to your investment strategy. Now, of course, once you have your strategy, the most difficult part is executing it correctly. But I think there are 2 main points here which you must follow. The first one is all about trust, and trust in yourself. You must trust yourself and ignore the crowd, because you will hear a lot of things, read a lot of articles saying that your stocks are going to do terrible, saying that the next year there's going to be a terrible crash. You must follow your instincts and ignore the noise and everything, and just trust yourself. And the second one is set objectives, specifically SMART goals, and stay focused. By SMART, I mean specific, measurable, achievable, relevant, and time bound. The most important ones being, of course, the time bound, because you want to set time limits, saying I will develop my first strategy in 3 months, and then I will start investing like this for 6 months, and then I will cut back, see what I can improve, and start the process all over again. And then, of course, as well, specific, because you don't want to say a goal of I will be rich by 2030. You must say I will be rich because I will do these 5 things. And the graph on the left just shows you the compounding effect, with Charlie Munger's most important rule, which was there is only one rule: don't lose money. And why is this? Well, this is because if you don't lose money, you will reap the rewards of the compounding effect. And this is why having a long-term vision is so important. Just look at in 7 years, look at how much, if your money is doubling every year, which is very unrealistic, but imagine you get a 10% every year, this is the effect that will show. Every year will progressively, the 10% in absolute terms will be a lot larger than the previous year. So just for a quick recap, there are things you should keep in mind if you want to become a successful investor. First one, you must educate yourself correctly and surround yourself with the correct people. Second one, you must create your own strategy. And third one, you must, of course, stick to the plan. So thank you for watching. This has been the Cashflow Compounder. As always, there is a link in bio for a free stock with either Trade Republic or Trading 212, and follow us on Patreon for more free content.